everybody. Welcome to Marshall Reddick's presentation on fundamentals of property management. And not just property management, but professional property management. And there is a big difference in the world of property management between what that of a layman, inexperienced, unlicensed individual, and that of a licensed professional with years of experience, knowledge, resources, and a team. So our presentation will be about 1 hour of as much information as we can pack into our webinar as possible. That we here at Marshall Reddick see, a lot of successes with our clients, and we see clients who, will maybe have a little bit of confusion, going down the wrong path. That will, provide them with a lot of helpful feedback to say, well, here's why, that might not be a good idea, and here's what we've seen. So we bring a lot of experience, years and years of experience to the table. My name's Scott Pastel. I'm the VP of Real Estate and Property Management for Marshall Reddick, and sitting here with me is Vince Tomich, our real estate advisor. How's it going, everybody? And so Vince and I are going to spend about the next hour with you folks going through some of the main aspects of property management. So hopefully if you're brand new and you've never owned rental property before in the past, I hope that you pick up on a lot of key points that you do remember, write down, take notes, and certainly follow when it comes time to acquire your first investment. And I see a lot of familiar names on our webinar as well too, of those that do own rental property and many folks that have purchased rental property with Marshall Reddick. So always happy to provide you guys with key insights and information to help you guys get a better or the best experience possible owning rental properties. So just really quickly, for those of you that are not quite as familiar with Marshall Reddick is a one-stop shop for residential real estate. Our goal is to simplify the process of buying and selling real estate for individuals who are looking to grow a rental property portfolio. We cover 16 markets across the U.S., from California to Florida and all the way up to Indiana. Our 5 main services are our real estate division, which has our realtors that help buyers or sellers purchase a primary residence or investment property. Our specialty is in residential real estate, so mainly 1 to 4 units, or we do some smaller commercial apartment buildings from about 5 units up to maybe 15 units. Anything larger than that, our expertise is really in more the residential world. As you start getting larger and larger apartments, you need on-site management, you may need HOA management, so that's not quite our specialty. But when it comes to the residential world, we've sold well over 10,000 properties in the last 40 years, well before I even started here in 2005. So we've got our team of real estate agents in 16 different markets of the country that can help you buy or sell a home or investment property. And of course, kind of the glue, which is what we're here to talk about tonight, is property management. We provide in-house property management. That means Marshall Reddick offices and Marshall Reddick staff in about half of our markets in California, Texas, and Tennessee and Kentucky. We have our broker's licenses in each of those states, and we have offices with staff in each of those locations. And the other 8 markets, we work with third-party realtors and property managers that have been designated as our regional representatives and have worked with hundreds and hundreds of our clients, from Arizona to Las Vegas to Memphis, Tennessee, and several more markets that I'll share with you shortly. We also have a private money lending department that provides asset-based loans to short-term or long-term borrowers looking to either do buy and hold investing or fix and flip that are really just not in a position to get conventional financing or looking for a loan with much less red tape and only looking to have to get qualified on the property and not necessarily the individual. So we work with a lot of self-directed IRA investors, a lot of investors who own LLCs or different entities that are not necessarily able to get conventional financing. We also work with lenders who are looking to fund a mortgage or trust deed directly on our website. And if you're looking for passive income, we have an entire mortgage marketplace right on our website, marshallreddick.com/mortgages. and you can peruse through many different lending opportunities that pay annual interest rates from 6.5% all the way up to 12%, pure passive income, all first lien position, and you can find those on our website. And then lastly, our free education and mentoring, which is what you are here to experience tonight. My background, really quick, for those of you that don't know me, I started with Marshall Reddick full-time in 2005. Was doing a lot of administration back then as a young college graduate, and ended up getting my real estate license in 2010. Prior to even obtaining my real estate license in 2008, I purchased my first rental property just about 2.5 to 3 years after I started working here. I'm born and raised in California. I've always lived in California, probably will for a very, very long time. And my very first property that I purchased was very, very far away from California. And, at a young age, without really knowing that much about how real estate investing works, initially, it was a very distant goal, seemed like something intangible and very difficult for me to obtain. And it was through a couple of years of talking to many other investors, watching a lot of our webinars and events, and ultimately learning about property management that made me more comfortable about buying a property, buying a house that I didn't occupy, especially one that was, many, many, many hundreds. In fact, this is a couple thousand miles away from where I live. Since then, I've purchased several more investment properties, and I'm currently the VP of our real estate and property management division. So what that basically means is I work directly with our property managers in each of our markets, from California to Texas to Tennessee, and our affiliate reps as well, managing our property management team, ensuring that the checks and balances and systems and processes are functioning, always trying to improve our software, talking directly, not just with our staff, but with many of our landlords as well, and just ensuring the satisfaction and decreasing vacancy timeframes, keeping costs low for our owners. So you can imagine that's a very busy day job. It's something I certainly enjoy doing very much. Here on our screen is a map of the markets that Marshall Reddick covers. And so we do have 16 different markets. The ones that are circled in red are actually just Marshall Reddick offices, meaning that Marshall Reddick is the property manager, the realtor, everything involved under one roof. And then in Florida, Idaho, Indiana, Nevada, and Phoenix and Dallas, we work with third-party teams. And many of these teams have been the same teams we've worked with for many years. They're third-party property managers and realtors. So it's a one-stop shop. And one of the many, many things that I'm going to cover tonight is that when you're buying a primary residence, you're going to work directly with a realtor, and that realtor is going to, find out a lot about your personal situation, your wants, your needs, your can't-haves, and they're going to work with you through this very emotional process of buying a home and making sure that it's everything that you wanted. Now, when you're buying an investment property, it's very important to work with the same team to help you acquire the property that's also managing the property. So working with the same company as your realtor and property manager. And I see a lot of people make a big, big mistake to hire a realtor, and then in some cases, after buying the property, will then go look for a property manager. That's what I call fire, ready, aim. Completely backwards. Save yourself a ton of headache and work with the same company that manages the property, who also helps you purchase the property. There is way more accountability in the types of properties that they are going to recommend to you. Not just from their opinion, but from their personal experience of renting properties in that neighborhood, knowing the demographics of tenants, knowing the demand and what tenants are interested in, knowing the rental market, knowing how long it takes to rent a property. These are only things that a realtor who specializes in investment real estate knows. Most realtors are not aware of these things because most realtors work with people who are buying a primary residence, and that's very, very different. So one of the things that makes this whole machine run so well is that the properties that we recommend in each of these markets are not just properties that our realtors are vetting. They're properties that our property management team is vetting. They're properties that are in some cases on the same street, the same neighborhoods, the same areas as properties that we manage or our teams currently manage. So we can say, well, we know pretty much the demand in this area. We know pretty much how long it takes to rent a property. We know how much the property rents for, and we can show data and speak from experience rather than just guessing. So I'll come back to these areas a little bit later in the presentation and explain why we're in these markets. But I wanted to show you a very important slide. Currently today, this is our entire property management team. Overall, Marshall Reddick manages about 450 properties in California, Tennessee, and Texas. And then outside of those states, in the other markets, our reps manage thousands of properties for Marshall Reddick clients in our other 8 markets. Top left, and I'll go in clockwise, that's myself. And then Hannah Van Horn is our property management coordinator who supports our property manager in California and then also Tennessee. Top right is Sammy Dabdoob. That is our property manager in Los Angeles and Orange County. And we manage about 100 properties in Southern California currently. And then on the bottom right, that is with a few extra added faces recently. That's our San Antonio and our Austin, Texas real estate team. We manage about 250 properties in San Antonio, from all the way down South Austin, all the way from San Antonio to New Braunfels, all the way up to North Austin. So large spread of land, and our management team is growing very rapidly out there. But these are the individuals that some of you may already have worked with and talked to that are really helping grow our foundation, our base, and then our continued scaling of a company in Texas. And then on the bottom left, that is our Clarksville, Tennessee team. Josh on the left, Christina, Malika, and then Ross Nelson, our broker, on the right. Ross actually, as you can see, is in both pictures, has taken a lot of trips to both of our markets out of state to ensure that it's running smoothly and that everything is working well. So it definitely takes a team to run something so large and to make sure that everything is efficient and smooth as possible. At Marshall Reddick, we practice what we preach. These are a few of my original investment properties that I purchased in 2008, 9, and 10. And I wanted to share with you some old photos. Now, I made a very big mistake, and the reason that I'm sharing you some of these photos is that is a large mistake that I made on the top right photo of visiting my tenants back in 2009 in one of my rental properties. I could get into more detail, but basically, I was 24 years old when I went out and visited this property. It was about 6 months after I purchased it, and everything changed after I met them. They were late in their rent. They had excuses for things. And the 6 months before that, the rent was coming in on time. I have a property manager, by the way, for all of my rental properties, which is what is probably the number one recommendation that I'm here to give tonight. I'm going to go through, what makes a good property manager and the difference between a good one and a bad one. But when you have a good property manager, you won't ever have to meet your tenants. And when you are an investor, you want to be a completely invisible investor. You never, ever, ever want to meet your tenants. Now, there's an old stigma of a mindset, and it's a very, very toxic, very, very common mindset. And that mindset is, I'm only going to buy a property that's within a short drive from my house. Well, the last time I checked, not everybody's house is within a short drive of the best investment market or a good investment market or even a decent investment market. And, there are lots of cities and states that are absolutely ideal for investors in terms of taxes, in terms of insurance claims, in terms of affordability and growth and job growth. And there are many places in the country that absolutely do not make sense. So that is a terrible, terrible reason to target an investment property. We have clients that we manage property for all over the world: China, UK, India, Israel, Australia, and many more countries that own property in California and Texas and Tennessee, and they're 10,000 miles away. So it's no longer a factor to be buying a property that's close to you. Now, when should you use a property manager? Well, the answer is anytime you own a rental property. If that rental property is next door to you, use a property manager. If that property is 3,000 miles away from you, use a property manager. If that property is in the same building that you live in, absolutely use a property manager. So it's a very, very false mindset. We actually do manage properties, multi-units, where the owner lives in one and rents out the other. Why would the owner hire a property manager? The answer is because he wants to live comfortably in his home, and because he does not want to mix his safety or her safety with finance and money. And when it comes time where rent is due on the 1st and it's late after the 5th, and that person who lives above them has still not paid rent, it's very uncomfortable to have to knock on that door and then walk right back downstairs, right? Well, the reason this owner hired us is because they were extremely uncomfortable having one shared wall from their tenant. Things got a little uncomfortable and weird, as they always do. And then they said, you know what? This just isn't worth it. I'm going to pay the measly 7% of monthly rent to be able to sleep at night and not have to deal with this person. So a property manager is not just a contractor, not just someone who swings a hammer and works on repairs and collects rent. A property manager is way more than that. A property manager is a buffer of liability and possibly safety between you and your tenants. So let's take a step back in terms of why we're investing in real estate. We're not investing in real estate to make ourselves busier. We're not investing in real estate because we're bored and we want a part-time job. And we're not investing in real estate for the beauty and the design. We're investing in real estate to build wealth, to have a retirement plan in the future, to build multiple streams of income. We're investing to be diversified. So these are the reasons. So really what we want to do is increase our profitability, decrease our risks, and decrease the amount of time and headache we have to spend on our rental properties. So going back to why to hire a property manager. Well, like I made the mistake of many, many years ago, it's the property manager's job to put a 3-day notice on the tenant's door if they're late. It's the property manager's job to tell the tenants, no, sorry, we don't cover that. That's your responsibility. It's in the lease. It's the property manager's job to enforce the lease, to do inspections, to have some of those uncomfortable conversations with tenants while you're working, while you're with your family, while you're traveling, and not having to worry about your properties. So what I want to get back to is a property manager is a buffer of liability between you and your tenants. You should never, ever, ever have to meet or talk to your tenants. Your tenants shouldn't know who you are. They shouldn't know your name. They shouldn't know where you live. And that creates a large distance between you and your tenants. And the property manager's job is to represent you for everything. And if worst case scenario, if in that tiny, what we find in our company, less than 1% chance that there is an eviction or the need for an eviction, the property manager goes to court on your behalf. So you should never, ever, ever have to meet or talk to potential or current tenants. So what I'd like to do, and I'm going to get into some nitty gritty here in a moment, but just before we get started, I'd like to take a quick poll. So you'll see a window pop up on your screen, and I'll give you guys about 10 to 15 seconds to answer this question, but I'd love to get a little bit more information about the folks that are on our presentation tonight. So the question is, how many rental properties do you currently own? And if the answer is 0, that's fine. If the answer is 10, that's fine. It's anonymous, and I'm going to share the results completely anonymously, just so that we have a better understanding of just kind of the mix of the crowd on the webinar tonight. So I'll give you guys about 5 to 10 more seconds to fill that out, and then we'll keep going. All right, I've got 80% of you. Looks like they're few more that aren't quite sure. Maybe they're adding it up, trying to count. Some people may have lost count at this point. Okay. All right. Let me close this out here. So if you're able to see, and thank you so much for participating, pretty good mix, as I was kind of expecting, and about a third who don't own rental properties yet, about half that have 1 to 2 rental properties, 6%, I'm not sure how many that is, could certainly count later, that own 3 to 4, and 18% that own 5 or more. Awesome. That is really, really cool. I love seeing that mix. And thank you guys so much for sharing. It helps me get a little better idea. And let me move that. So as I kind of alluded to a second ago, is that the basic goal of investing 101 in any type of investment is we're looking to achieve the highest return possible with the least amount of risk and time. So if time is not something that you're looking to reduce, then you're looking for a job. But because we're talking about investing, we want to be able to reduce the amount of time we spend. So this has to be treated as a business. Those of you that own 3, 4, 5, 6 properties, you understand the word scalability. And that's what the entire process of owning real estate is all about, scalability. Being able to not over diversify and have 8 properties in 8 markets. Not putting all our eggs in one basket and owning 8 properties, within a 10-mile radius, but having some sort of diversification among 2 or 3 or 4 different markets, having the ability to not work 40, 50, 60, 70 hours a week on your rental properties, but maybe only spending a few hours at most a month on your rental properties, checking your owner statements online, checking your income and expense reports, looking at and verifying any receipts or invoices for expenses, right? Checking your bank account to make sure the electronic deposit has gone through. If there's a vacancy in your property, you may have to get a little bit more involved in having conversations with your property manager, setting expectations on the rental amount, the amount of days on market. But by and large, if you're doing this correctly, working with the same team, having property management in place, then there really shouldn't be a lot of time and effort invested. And you want to start small and work your way up. So if you're new to this, I would avoid buying a 4-plex as your very first investment, and maybe looking at buying a single-family home or a duplex. And then as your second or third investment, then look at buying larger properties. But it's very important that a new investor, and part of what Vince's job is to help somebody understand exactly what types of properties make sense for them and their goals and their financial situation. So how do we reduce the amount of time that we spend on our rental properties? So here are some of the main things that property managers do. So I'll kind of go through these a little bit in more detail. So when you're acquiring a property, if it's not a turnkey rent-ready property, so let's say it was like sold on the MLS and the seller moved out, sold it as is, maybe did a few fixes, but like most properties, it might need a little bit of work, maybe some touch-up paint, maybe carpet cleaning, a few little things here and there. Most of the properties that we sell at Marshall Reddick usually need maybe $1,000 or $2,000 or $3,000, up to as much as maybe $5,000 of initial fix-up in order to place it on the rental market. So as soon as you close escrow, your property manager, who you've hired, hopefully hired right before closing, it's a little tricky because the property manager is going to make sure that you own a property, but you want to have those conversations well before closing escrow. So that way, when you do close escrow, you've already reviewed the contract, you're ready to sign it right at that point, and then they're able to move everything over in their system right away. You want as little of a gap as possible in that process. And part of what makes it streamlined working with the same company is that if the realtor and property manager are the same team, then the property manager already knows the property, they're already familiar with it, and once you've closed escrow on it, we already have a rental analysis. We can post it on the rental market almost immediately, depending on how much work it does and work it needs, but there's going to be very little gap in between. So Either way, when you're working with a property manager, either when you're acquiring the property or when a tenant moves out of the property, they're going to walk that property, take pictures, take notes, and estimate the fix-up costs needed. Now, if you had a renter move out of your property, there's going to be a process of a security deposit refund or potentially not a refund, depending on the condition, that may go back to the tenant. So the average security deposit is 1 month's rent. That's kind of the industry standard. So, $1,500 rent, average security deposit would be $1,500. Now, we have some unique circumstances where we may have a tenant who has excellent income, been at their job very long, and maybe their credit is just under our minimum. And our minimum credit score requirement is 600. Obviously, we want 700, but everything it has to be weighed together, and there's many different factors to look at. So in some cases, we might have somebody who's just under our minimum, but they've got good rental history, good job history. They make well enough above of our monthly minimum income requirement. So we may ask them to put down 2 months of a security deposit. Now, I know in most states we can ask for as much as 3 months of a security deposit, as long as that fits the scenario and as long as that's what the tenant agrees to. But most cases, we're going to take 1 month security deposit. Prior to a renter moving in, we're going to conduct a move-in inspection. And I have up here, after getting the property fixed up, we work with third-party contractors, and that's a very key point. Some of the main issues I've seen in the property management world trace back to property managers that make money from maintenance and repairs. So one of my golden nuggets of information tonight is to only work with a property management company that doesn't do the maintenance and the contracting in-house. And that might sound like backwards to some of you, and you might be thinking, well, wouldn't it be better if the property manager is also the contractor and doing the maintenance? Well, not exactly, because that's a very big conflict of interest. The only way that the property manager-landlord relationship works is if the property manager is only making money when the landlord's making money and is not making money when the landlord's losing money. That's how a successful landlord property manager relationship works. Unfortunately, the property management industry is filled with this conflict of interest, and a large majority of property managers make money from maintenance and repairs. And I see it in two different ways. One, like I mentioned, you have some property management companies, and most of the time these are companies that only do property management, and they may not be doing sales. But sometimes you'll find it in companies that do sales and property management, that they'll have an in-house maintenance and contracting team. So what's happening there is that they're either requiring you as the landlord to have to use their in-house maintenance team, or if they're not requiring you, then they do this nasty little trick where they add 10 or 15% markup on top of the third-party contractor's bid. And they justify that as, well, it's a maintenance coordination fee. We have to coordinate the bids, right? Which there's work involved in that. They've got to have they've got to coordinate the contractor to come to the property. They have to obtain the bids. They have to talk through them, and there's work involved in that. Fair enough, but that's not to your benefit. And a good property manager is going to say, you know what? The maintenance coordinating should be part of our monthly management fee. That's why the landlord is paying us 7 or 8 or 10% of the monthly rent. So that's how we look at it. The property managers that I'm referring to that do maintenance, contracting in-house, so like I said, they're either going to require you to use their teams or they're going to add markups on top of third-party bids. That's not what you want. And anytime that there is an expense above, I would say above maybe between 500 to 1,000 or above 1,000 and up, I think it's fair to ask for and obtain multiple bids, right? So painting, flooring, even things like appliance repair, counters, cabinet repair, plumbing, if it's a major plumbing issue. These are things that you want 2 or 3 bids on, and you want to be working with a property manager that has no bias, no financial ties or incentive to the contractors. So we do have an entire team of third-party contractors, everything from house cleaning to electricians, plumbers, roofers, HVAC technicians. These are all third-party companies that we've worked with dozens and dozens of times, and we can speak to them from experience, but they're preferred vendors. And we don't require our landlords to have to use them. We just highly recommend it. That's what a good property manager is going to do on that area. Anytime that the property goes vacant, we're going to run a thorough rental analysis. So no matter who you're working with, whether that's us or another property manager, the only way to obtain the rental amount is through a rental analysis, not Zillow's estimate, not your opinion, not what it rented for last time, not what your neighbor's getting. It's through a rental analysis. So that's where a realtor or property manager will open up the MLS and they'll look at all of the rented properties in that area with similar bed bath square footage, similar condition, similar lot size, and say, according to these, 10 properties within 2 miles that are all very similar, your rent range is going to be between about $1,450 and maybe as high as $1,550, right? There's never that exact number. Now, we may have a pretty good, strong, educated estimate based on the data, but ultimately, an owner can say, you know what, I want to rent my property as quickly as possible. Let's list it for $1,425 or $1,450, and we can certainly do that. And if an owner says, you know what, I really think $1,550 is where I want to start, we're going to say great. So we'll post it for $1,550, and every week our leasing agent is going to give you updates on the calls, showings, applications, and interest to let you know if we feel like we're priced well. And typically we're right most of the time. And if we find that property is really not getting any calls or interest after at least a week, we know that there's a problem because we advertise it on all the major websites. We take professional photos. So we know really the only other, the X factor is the price. So after conducting the rental analysis and providing that to the owner, we'll give them our opinion of the rental amount. And then when we agree on a price, we take professional photos and we advertise it on all the major websites. So that's Zillow, Trulia, HotPads, even Craigslist, apartments.com in some cases, rent.com. These are some of the major websites that you see on Google search results. 2 very important things. We advertise it all over the internet and we take professional photos. So we know that it's not a function of advertising being a problem. It's not a form of the visual pictures being a problem. It's, if we're getting a lot of interest, we know we priced it right. And if we're not, then we know we didn't price it right. So that's a conversation that we have up front with each owner to set those expectations and let them know based on the rental amount, roughly how long we think it'll take to get an application. We get applications coming in every day from our various markets. So what happens when we get an application? So this is the underwriting part. Now, before receiving an application, our leasing agents are having conversation after conversation with what we call prospects, who are potential renters who are interested in the property. Now, a good property manager is going to assign a dedicated leasing agent to each property. So Marshall Reddick, every property has one dedicated leasing agent, and that realtor, licensed realtor, specializes in renting properties specifically for Marshall Reddick. So they know all the right questions to ask on the phone. And now we do private showings. That's not what every property manager does. Some property managers will just post it on the MLS and let third-party external agents show the property. It's not very effective from what we've seen. You've got to have a dedicated person who is tied to the success of that property, who's accountable to it, and that's what the leasing agent is. So our leasing agents are like almost like listing agents for a rental property. They represent the owner. And we screen them over the phone. So we ask, where did you find the property? When are you looking to move? Do you have any pets? Why are you moving? Where do you work? Do you know what your credit score is? How many people do you live with? And we kind of go through the checklist of key specific questions to weed out anybody that we don't even want to, take the time to show it to. So if somebody says, I'm looking to move in October, and here we are in May, we'll explain to them we're looking to rent this property for people who are able to move within 30 days. We want to decrease that vacancy. So our leasing agents will screen them over the phone, and they'll conduct private showings. We typically do anywhere from 5 to 10, maybe sometimes a little bit more than that, showings. And then when we receive applications, we do all of the background checks. So I'm going to tell you right now, it's not on the screen, but there's basically 5 different background checks that our property managers do. And first and foremost, the leasing agent is not the same person who does the screening and background checks. That's our checks and balances. The property manager is the one who does the screening and background checks. The leasing agent's job is to get applications. So the property manager, once we receive an application, does 5 different things. Number 1, a credit check. Number 2, criminal history, background check. Number 3, income verification. Number 4, rental history verification. And number 5, verification of employment. So all applicants must provide photo IDs and last 30 days pay stubs or proof of income for us to verify that they make at least 2.5 times the monthly rent in their gross household income. So that's gross income. We don't receive or even look at bank statements. They have to show us their gross income. And it has to be a minimum 2.5 times the monthly rent. That's a pretty common qualification guideline for income. Well, how do we prove it? They have their paycheck, right? It has to be an actual proof of income, so not a screenshot of their bank account online. It has to be an actual pay stub, and then we call the employer. We verify that that person works there, that they're in good standing. We verify their start date, at their employment to make sure everything checks out. And so we verify their employment, and then we verify their rental history. So we call their current and previous landlords to ask them questions like, did they leave the property in good condition? Would you rent to them again? Did they pay rent on time? Did you ever have to serve them a 3-day notice? And then there's the credit report. So the credit report, we look at it a little bit differently, right? We're not qualifying somebody for, an $800,000, jumbo loan to purchase a property. We're qualifying somebody to rent a property. So what we're really looking for is if they've ever had any evictions, if they have anything in collections, if they've had any 90-day late payments on any lines of credit, they've had any foreclosures. Those are the things we're looking for. And that's kind of, at least minimum 600 mid-FICO score is our basic requirement. But any evictions get immediately tossed out. Bankruptcies, these are things that show up on the credit report that we have a lot of history, treating and handling. So we're looking really for just the ideal client. Now, when we do approve an applicant, we'll inform the owner. We, as a property manager, sign the lease with the tenant, and we actually sign it on behalf of the owner. So the lease it stays with the owner, but it says, the owner's agent's Marshall Reddick, so that we do all of the communication. Now, on the 1st of every month, rent is due. In some states, like Texas, rent is considered late after the 3rd. And here in California, most lease agreements will give them a 5-day grace period, which is one of the little elements of why California is a little bit more tenant friendly. Their grace period is usually a little bit longer than it is out of state. But we implement a late fee. And here in California, the late fee is 6% of the monthly rent, which is the highest that the state of California lets us charge. In Texas, we can charge them pretty much anything we want. I mean, that's obviously to a certain degree. But our late fee in Texas is a lot more aggressive. They owe a 10% late fee, and then there's a per diem charge every single day. So that late fee accrues every single day as until they pay rent. So that's a lot of leverage and a lot of motivation to get their rent in on time. Our property managers will call them and check in with them, find out why is rent late, have those conversations. We keep our default rates pretty low. about 1 to 3% at most every given month. That just means late rent, 1 to 3% at most. And, typically if we have a problematic tenant who's late every month, we'll start to, have conversations as we get closer to the lease end date to figure out if we want to submit a notice to vacate. So the property manager collects the rent. This day and age, you should be getting an ACH, so you should be receiving all your rents through direct deposit. We collect the banking information of the owner and direct deposit to them around the 15th of every month. And right around that same time on the 15th of the month, the owner is provided with a monthly statement that's emailed to them, and it's also uploaded to their online portal. And their portal is their account on our website. So any decent property manager this day will have a property management software that allows renters to log into their account to submit rent payments, to submit maintenance requests, to kind of check the status of maintenance requests. And landlords can log in to view invoices or receipts on any repairs, to check the status of their direct deposit, to download their income and expense reports, to download any tax forms. Everything is directly on the portal. And all of the lease documents, the lease addendums, are all uploaded for both the tenant and the owner to see. And then lastly, a property manager, usually at the discretion of the owner or the property manager, might recommend a periodic inspection. So we typically, we will recommend that in certain cases if we drive by a property and feel that there might be a need, especially if a renter is late or if we've kind of been having a lot of maintenance issues reported by a tenant. We will call a inspection. And there is a fee to do that. Average is, $50 to $100 for a one-time inspection that the landlord pays. It's the property manager has to coordinate that visit with the tenant, and sometimes tenants are not as easy, maybe a little slippery to be scheduling that. So we kind of have to do some follow-up, get it scheduled. We are allowed to submit them a notice. So we'll obviously try to coordinate a time, but if we're not getting a hold of them, we will submit a notice, and then usually within 48 to 72 hours, we'll just show up. We keep a key on hand for each property. So, that's just kind of like, part of our role. And in some cases, we might have an emergency or a serious need to enter a property. So now how much does property management cost? So here are some of the main fees in the property management industry. So every property manager will charge a leasing fee, and you want to pay a leasing fee because you want to decrease the vacancy and get that property rented as quickly as possible. So a leasing fee, the common leasing fee is about 50% of 1 month's rent. And that's never paid up front. It's always contingent on the performance. And after the tenant is in the property, once they make their first rent payment, that leasing fee gets deducted from the first month's rent. So the property manager and leasing agent, they got to do their job, get somebody in the property, collect that first month's rent, and then that's that one-time leasing fee. Now, the management fee is charged based off of the monthly rental income collected. So a good property manager is not going to charge a management fee during a vacancy. I still see some property managers out there doing that, which I think is totally bogus. But a management fee should only be charged when there's rental income collected. Common management fees are anywhere from about 7% to 10% of the monthly rent. And that's industry-wide, nationwide. That's pretty much what the large majority of property managers charge. And I just kind of went over with you a lot of the tasks that are involved and kind of what the property manager does. Now, Marshall Reddick, one of the things that makes us unique is that we don't charge a lease renewal fee. A lease renewal fee is when that tenant occupying that property renews their lease for at least 12 more months. Minimum leases in the property management world are 12 months. Anything less than that is considered short-term, and that's usually we find short-term rents in like vacation rentals or Airbnb or something that is less than 12 months. But in the residential real estate world, leases are 12 months and longer. And in some cases, we're able to sign a 2-year lease, which we will ask for the approval of the owner first. But most cases, the owner is very excited about a 2-year lease. But when it comes to renewing that lease, we'll do the negotiating, and we'll do the lease renewal process of reaching out to the tenant about 90 days before the lease expiration date to ask the tenants, how are you liking it? You guys planning on renewing the lease? Have you thought about whether you'd like to renew or not? And then we can have that conversation of whether we're going to renew the lease at the same rate or have an increase. Or what we do is if the tenant decides that they would just like to remain month to month, we charge them $100 on top of the renewal amount. So what I mean by that is if they're currently paying $1,500 and say the 12-month renewal is $1,550, and if they decide, I'd prefer to do the month-to-month route, then that rental amount would be $1,650. So, if they're not willing to sign a lease, that's great. Let's add that month-to-month fee on top of it. Some property managers charge like a setup or administrative fee in the beginning. We don't have any initial fees whatsoever. You should not be having to pay any advertising costs or any marketing fees. All of the advertising and marketing fees should be built into the leasing fee. And I occasionally see some companies charging these extra fees for advertising, extra fees for marketing. And this day and age, the majority of the advertising is free online. I mean, Zillow and Trulia and HotPads and all these major websites are free. So there's really no reason why you should have to pay additional advertising fees to market your rental property. But that's something I still see, some companies do that I just don't think is needed whatsoever. And then you have some miscellaneous fees. So where do you find these things? Well, some unscrupulous companies, or just even a lot of management companies in general, they hide all their fees in their lengthy contract. They may have a 8 or 10-page management agreement, and you have to dig through it to find out what their fees are. I don't particularly like that. I wouldn't recommend working with a company that's not transparent about their fees. Our fees are right on our website, fully displayed on there, and the contract has all of those fees in it with lots of other language, more like procedures. But some companies charge like service fees and trip fees for visiting the property, accounting fees, and these are all fees that you should not have to pay. The two main fees, and in most cases, the three main fees are leasing fee, management fee, and lease renewal fee. And you will find some companies like us that don't even charge the third one. How can you make money hiring a property manager? Well, you have to understand here, and what most people think is, I have to pay 7% of my monthly rent to a property manager. Well, that decreases my monthly income a little bit. Or I have to pay a leasing fee to rent that property. Try it on your own, and any given of time, whether that's a month or 2 months or a year or 2 years, I guarantee you will realize that this is one of those things. There's enough money involved, enough at stake that you want to leave this in the hands of a professional. And I can't tell you how many times we've rented a property in a fraction of the amount of time that it would have taken the owner. Meanwhile, you have to realize that you're losing money every single day when you have a vacancy, right? So do this little example. Take the monthly rent of your property, divide it by 30. So let's just say $2,000. Divide that by 30. So if you have a property and the fair market rent on that property is $2,000, which here in California would be low, but out of state, that would be considered a little bit more normal. You're losing $67 every single day, right? So if a property manager that takes professional pictures, that does a comparable analysis and knows what that property will rent for, advertises all over the internet, and has a human being answering the phone and responding to texts and emails all throughout the day, if that property manager or that leasing agent can get that property rented in 2 weeks, versus an owner trying to do it themselves and taking 30 days, 45 days, 60 days, and then choosing the wrong tenant, you're going to be losing many, many, many thousands of dollars. So spend a little bit of money to avoid losing thousands and thousands of dollars and a lot of headache and stress. So marshallreddick.com/management is the property management section of our website. It lists all of the services that our property managers perform And then underneath that has the management fees and pricing of all 16 markets that we're located in. So you can find the fees that each of our property managers in each market charge directly on our website. And you can just click on the city and then it'll pop up with the pricing sheet. So I'm going to spend a few minutes with you now to, I'm reviewing the California Association of Realtors Property Management Agreement. We use the state's property management agreement in each market. Every state has a state association, and every state association provides a boilerplate agreement for realtors and property managers. Rather than us completely reinventing the wheel and trying to draw up our own contracts, we use the state contracts. In my opinion, I think as a landlord, that's a safer way to go, so that you know that you're working off the same contract that most property managers do, and a contract that was written by the Department of Real Estate in that particular state. However, there are some property managers that write their own agreement from scratch, and you should absolutely read that agreement word for word, because they are not using the approved state association's contract. Okay, so for about 5 to 8 minutes, I want to cover some of the main key things you're going to find in any property management agreement, any state. They're all quite similar. You're going to see at the very, very top, of course, it'll have your name or the entity in which you hold the property's name and the address of that property. It'll have the date, and then it'll have the duration of that contract. Well, most property management agreements are a 1-month agreement, and most of them basically say that either party may terminate this agreement with at least 30 days written notice after the commencement date. Now, you have to look for a different section in that management agreement, which usually is the cancellation or termination clause. And what you want to find is, am I paying any fees if I have to cancel this contract within that 12-month agreement? Or will I have to pay any fees if I cancel it after the 12 months are up? Most of them will say it's a 12-month agreement. It automatically renews at expiration, but either party can cancel with a 30-day written notice. That's what the majority of contracts state. I would say maybe like 6 or 7 out of 10. And then maybe like 30, 40% will actually have a fee in there that will say something along the lines of the owner, at worst case scenario, and these are the companies you don't want to work with, are going to say that you owe the remaining management fees for the rest of the lease that's in place. So say there's 11 months left on the lease of the property that they're managing, and you cancel, that company might try to withhold 11 months worth of management fees from the next month's rent that they collect. Looking at that up front, you really kind of have to poke some holes in that and figure out if this is that's a company that you want to move forward with. So charging high fees is certainly no way to build a fruitful long-term relationship with anybody. So make sure you know what your cancellation fees are with that company that you're hiring. Then the next section that I want to point to is the repair and maintenance approval minimum. So that's the section D. It doesn't really matter. The contracts are different, in each market, but every contract is going to have a dollar amount of a one-time maintenance repair of the minimum amount that the property manager must get your approval for. That number is usually between about, I see like $250 to $500 kind of across the industry. Every property manager is going to have this. No property management company with staff and hundreds of properties and lots of systems and processes in place, no company like that can reach out to every owner for everything as simple as fixing the doorknob out on the front door, right? Let's say if that is a wear and tear issue, right? The reason is because some owners don't want to be bothered. Some owners live across the world. Some owners live, 10, 15, 16-hour time difference. And really when it comes down to it, we have a time-sensitive obligation to get back to the tenant and rectify certain issues. So we're going to determine whether this was caused by the tenant or whether it's considered normal wear and tear. And a common tenant-related issue are clogged drains. So if the tenant has been in the property for long enough, I would say more than a month, and there's a clogged drain, and we send our plumber and they pull out just gobs and gobs of hair, well, we know that that was a tenant-related clog. So depending on the issue, we may or may not treat it as tenant, or may treat it as tenant or owner responsibility, but our minimum requirement to obtain approval from the owner is a $400 maintenance issue, and we'll reach out and have those conversations, while the issue is occurring. But no matter what the dollar amount is, we are going to provide an invoice and a receipt directly to your owner portal, and that way you're made aware as soon as it occurs. And it's not something that you find out about a month later when we send out your rent payment. It's something that you'll know about as soon as the bill is paid. Security deposits are held in the broker's trust account. If you're working with a property manager and they didn't demand or make it a requirement that the tenant's security deposit sits in their trust account, then I would consider that a red flag. A property management company legally has to put security deposits, and I know in certain states like ours, a non-interest bearing trust account that cannot be commingled with any other fund. So we legally have to put the security deposit in the trust account. We can't give that back to the owner so they can go spend it. We have to put it in the trust account because that's the tenant's possession. That security deposit does not belong to the owner, belongs to the tenant. And if and when the tenant moves out, we will reconcile the security deposit to determine what needs to be refunded and then what goes to the owner. And part of us doing a move-in inspection on the first day of the lease and a move-out inspection on the last day of the lease is it gives us very black and white knowledge of exactly what damage was caused by the tenant after they moved in. The reserves, so Section J on the management agreement I'm looking at. So most property managers will also hold on to a small amount of money in their trust account that belongs to you, the owner, and that's called the owner reserve. That's usually between about, I would say, $300 to $500. Our reserve is $500, and here in California, and then our reserve in Texas and Tennessee is $250 per property. That's if we have to make an on the spot payment to a vendor for a small item, especially if it is an emergency. We have some funds that we can pay out to fix the issue. Also, we use that during a vacancy to pay for the utilities, the landscaping, any fees during the vacancy. So we as a property manager actually have the utilities in our name for each property, in our company's name, and we're paying the utilities for the owner so they don't have to worry about making the water bill or the gas or electric bill while it's vacant. That goes and switches back to Marshall Reddick during the vacancy, and then as soon as we approve a tenant, we provide them with our tenant onboarding packet. Our welcome packet has all the utility providers, and we instruct them to turn utilities on in their name, and then they provide us confirmation that they've done that prior to move-in. That way we know that the utilities will be in their name once the lease starts. Owner distributions, so every property management agreement should state the time of month or how often the property manager submits payment to the owner. We do that, as I said, once a month, like most property managers do, right around the middle of the month. And you should see, section for compensation that has all the fees listed on it. What's the late fee? So it'll say whether or not the property manager keeps the entire late fee or splits part of it with the landlord. Now, best property managers are going to share some of that late fee with the owner. We split the late fee in half with the owner. So if we collect a late fee, whether that's the 6% late fee in California or that late fee out of state that accrues every day, whatever we collect gets split right in half with the owner. We feel it's fair to share. If the owner has to suffer, waiting a little bit longer, why not share the late fee if they're the ones that have to pay the mortgage? So what we provide, there's always some notes, some remarks on different clauses. We have in here that we require owners to carry liability insurance, a landlord policy, and name us as additional insured on that landlord policy. We also require renters to carry their own renter's insurance policy. It's extremely cheap. Renter's insurance is like $100 to $200 a year on average. It'll insure some of the renter's personal property. It's a very good idea to have for many reasons. One of which is if there is a large repair issue and the tenants have to get moved to a hotel or an Airbnb, the owner's insurance policy through the loss of use clause should be paying or pay out the rents to the owner. Meanwhile, the renter's insurance policy will also have loss of use where their policy will be paying the owner's rent as well for a certain amount of time. It's always extremely important, and it helps put that tenant back in that property rather than them enforcing to move out entirely and go find another place. Not to mention, it ensures their personal property for the safety of the tenants in our properties. So I'm only going to share this slide for a second, as I know I'm just getting to 1 hour right now. We are recording the presentation, and I went through a lot of the process with you guys tonight. So hopefully you have a little bit of a better idea of like the step-by-step process of what a property manager does from start to finish. But if not, here's a good visual so you have a better idea of like exactly what does that process look like from the time of vacancy all the way to the time of not just leasing the property, but conducting move-in inspections and then ongoing inspections to ensure the success and happiness of the tenant and the property. Tenants can move out of properties for different reasons, but I find that some of the reasons could be just how well they feel like they're getting taken care of by the property manager, right? If they don't feel comfortable, if they don't feel safe, if they don't feel appreciated or respected, whether or not they love that house or that neighborhood, they're probably going to look for another place. So it's the property manager's job to use respect, use consideration, to be responsive, to follow up quickly, and to be an excellent communicator to that renter. So at least, if nothing else, they feel like their voice is heard and they're being taken care of. The few landlord tips for you on here. As a landlord, it's very important to keep track of important dates. I have in my calendar the lease expiration dates of all of my rental properties. I have a 90-day reminder. I have a 60-day reminder just to help keep me on track of when my leases are expiring or renewing. I highly recommend that you have a separate checking account for your rental properties. If you have, I would say just between maybe 1 to 5 properties, maybe between 1 to 3 properties per account. Many banks can allow you to have multiple, checking accounts, or you can open a checking account at a different bank. What you want to do is you want to have 3 to 6 months of reserves of cash reserves for each property in your bank account. And you don't want to, I guess you could say, commingle that account with your savings account, because you want to be able to track the performance of your rental properties over time. So now when you have a separate checking account, it's very easy to track the performance of your rental property based on the cash flow and the income going up, going down. Much easier to pull reports from your online bank and see just the income and expenses. If the money's going in and out of your savings account, it's like, how in the world can you keep track of that? But here at Marshall Reddick, we reach out to tenants 90 days before. As soon as we have that confirmation, we'll let the owner know. We encourage owners, if they'd like to reach out and find out how things are going. I would say probably right around the 60 days prior to the lease expiring is a good time to check in and see how that's going. But keep in mind, and something that savvy landlords, experienced landlords will always say, is that it's always less costly to price your property competitively from the very beginning rather than trying to go higher and then ultimately lowering it 30 or 45 or 60 days later, right back to the start. So Also, when it's priced competitively, we can pick from the cream of the crop the best tenants possible. If we have a property that we feel is a little overpriced, been on the market for 30 days, the first application comes in, we have really nothing to compare it to, right? So we're going to look at it, objectively and make our decision based on whether we feel like that's a good tenant or not. But unfortunately, we can't pick from the cream of the crop because it's just doesn't have as much demand. And something that happens with I see the pitfalls of owners and landlords sometimes is that maybe they didn't price it right from the beginning. They try to manage it themselves. They took pictures on their phone. They don't know exactly where to, how to place the ad. They don't know how to write a marketing description. They don't know how to fill out all the fields correctly. No one's seeing the property. The ones that are seeing it, the photos look terrible. It's overpriced, right? And then now at 60 days vacancy, the owner's going like, I can't have this vacancy anymore. Like, can't pay a mortgage third month without income. Next person that walks along gets the property, right? And then that emotion kicks in. Well, this person looks really nice and they dress well and, everything sounds great, right? But they don't know exactly what to look for. What are the key indicators? So when you're not rushed and you're not desperate, it's a lot easier to not have any emotion. And if you're using a property manager, well, we're looking at this in our business and treating it as a business. So we don't get emotional. We look at exactly at the data completely unbiasedly to make a professional opinion on approving or declining that applicant. So now we find that based on the property class, which is something that Vince and our advisors go through in more detail, we find different types of tenants in different property classes. And you'll notice that based on the property being an A class, B class, C class property, we typically see similar amounts of income, similar professions and jobs. We find that in single family detached homes, 3 and 4 bedroom homes, a lot more renters have pets. So when it comes to animals, how does that work? We really recommend if you have a single family detached home that you at least have on the ads cats or small dogs, okay? We follow each state's restricted dog breed list. So there are certain dangerous breeds and animals that we don't allow. You can Google the state's restricted dog breed list to see it. Same with what you're thinking: Rottweilers, Pitbulls, Great Danes, wolf breeds, and sometimes I think Siberian Husky might be, if I'm remembering correctly. These are again, we're taking our emotion out. Like whether I had a Siberian Husky when I was a kid, I had a really good friend who did, and I loved the dog. I don't care. This is an emotionless process. I want the least amount of risks possible. And according to the state, if these are dangerous breeds, then we don't allow them. We have a weight requirement. So under 60 pounds is our weight limit for animals. And again, that's because, for the safety of the owner and the property and the property's condition. So when we do approve an applicant or tenants that have pets, we actually charge increased pet deposits on top of the security deposit, because pets possibly can tend to cause a little bit more damage, maybe especially this carpet. And again, that's going to be the final decision of the owner, whether the owner actually wants to allow pets. But if you've got a multi-unit and they're 2-bedroom units, you have a multi-unit and maybe you're even 3-unit bedroom units, I think you can be a little pickier, especially when there's common walls or multiple floors. But by and large, in single-family detached homes, 3 and 4 bedroom homes, a lot of applicants will have pets. So we have to take that into account, and then just be really strict and stern on our pet requirements. So the only thing that is absolutely certain is that there are exact measurements to take to attract a quality tenant. Now, the condition, the price, the advertising, and the photography along with the follow-up of whoever is answering the phone or responsible for renting that property, are the 5 factors that go into how long it takes to rent the property. Now, what we found is that the condition will attract the right or the wrong tenant, especially if it's priced too high. Then it's, it's going to have to get lowered and lowered and lowered in price, and then you may end up attracting the wrong people. So property manager is going to give you very, very objective feedback on exactly what's needed. So if it's been 8 years since you've done a full interior paint, or let's just say the paint is 8 years old, it's been touched up 4 times, and the property manager is saying, I really, really, really recommend that you do a paint job, and you're thinking, darn it, I really don't want to spend that $2,000, $2,500 on paint. Well, the risk that you're running is having a much longer vacancy and lowering your rent ultimately anyways, because good quality tenants want a property that's in good condition. So you may have to lower the rent, you get a lower quality tenant, and then the problems start. So starting with condition is extremely important. The property class will determine the quality of tenant. Whether or not the property has, I would say at least a dozen to maybe 20 pictures, minimum 10 to 20 pictures, all the rooms, and professional photos. It's just incredible how many horrible photos there are online of rental properties and even properties for sale. Now, you have to imagine that a potential renter is looking at 20, 30, 40, 50 or more properties until they end up moving into one of them. What do you think, other than price, what are they looking at? They're looking at the pictures. They're trying to visualize themselves living in that property. So if it's blurry or dark, it gives off a negative impression, right? If it's high quality, high resolution photos, if it's clean, if it's light and bright, it's going to give a very positive feeling. That person's going to go, oh, I'm interested in this property. I like the area. I've looked at 5 properties in this area. That one looks great. And then, of course, screening the tenant will weed out and detract any poor quality tenants. So some of the things I kind of went over already. So I'm going to move on from there. I guess one point that I wanted to make here is the last bullet point: who's managing the property and what are their priorities. So one of the many rules that I'm providing you guys, one of the many golden nuggets here is don't hire a realtor to be your property manager. What I mean by that is a realtor who helps people buy and sell property should not be your property manager, right? Definitely don't hire a friend or coworker or family member, and definitely don't do it yourself. But when it comes to hiring an individual professional, don't hire a realtor. And a realtor's priorities are not in managing properties. A realtor's priorities are getting listings, getting $1 million listings, working with buyers, working with sellers who are not just selling a property, but also buying a property, working with the referrals of their clients, sales, commissions. That's what realtors are looking for, right? So now the problem is that when a landlord who is, let's say, an investor who's buying a property finds a realtor on their own and says, by the way, can you also manage this property for me? Well, technically, I guess you could say they can, because anybody could. Doesn't mean they're going to do it right or do a good job, but anybody can try, right? So a lot of realtors will try to manage a property only to maintain that relationship with their client, because they know that client is going to be buying more property. And they know that that person might end up selling property. So they want to be that realtor when they're buying or selling more property. So they go, yeah, I can help you. I've got a decent knowledge of repairs, and I know the area, and it can't be that hard. I'm sure I'm going to help. I can help you, no problem, right? And you might be thinking for like 3 or 4 months, man, they're doing a good job. Like, I haven't had any problems. Well, that's luck. That's called luck. So then when there's a problem and they totally botch it because they're not property managers, they don't have the contractors, they don't have, they don't have the motivation to stop what they're doing and handle a maintenance issue, right? So if they're driving to a listing presentation to try to score that $1 million listing, and the tenant in your property calls them and says they have a leaky faucet, that's like the last thing they're going to get to, right? They're focused on the dollars. So it's a pitfall and it's a detriment that I see a lot of people get into. Now, I said even worse than that is friends and family members. Don't mix families with this business, please. Keep this something that is treated entirely as a business. Sure, teach your children how this works. Teach your spouse, teach your friends how this works. Do not rely on them to do this for you. Hire professional property managers. One of the things we do is take beautiful photos. The property in Irvine that we recently rented for just under $5,000 a month. We take professional photos for all of our properties. And of course, I wanted to share with you, this one is actually a mile down the street from our office in Newport Beach, so it's very close by. This was actually a furnished property. We don't commonly recommend furnished properties for many reasons, which I can get into more one-on-one. But, there are some properties in areas that do attract a high demand for furnished properties, usually near an airport. This happens to be less than a mile from John Wayne Airport in the downtown of, I guess we could call the downtown of Orange County, right off Jamboree and MacArthur. So it's an area where there's a lot of people coming from out of state and internationally that are actually looking for a 12-month lease for a furnished property. But by and large, most people are not willing to nor interested in renting a furnished property for 12 months, which is one of the reasons why we typically don't recommend it. But yep, just so you can take note of some of the photos. Some of the mistakes property managers make, I kind of ran through some of those for you guys, but choosing a property manager that's closest to your rental property is not necessarily going to be the best property manager. I know that definitely from experience of people who have hired property managers down the street, local mom and pop on the street corner property managers that are absolutely horrible. So you want to look at their website, you want to look at property managers' Yelp pages, look at their Zillow pages, read reviews. If you really need, somebody to talk to, ask for some references of other landlords. Don't just like throw a dart at the map and go, that's the closest property manager, so they must be the best. I know when I'm looking for a good restaurant, the good restaurants are not necessarily just coincidentally next to where I live, right? I might have to go a little out of my way if I want, the best burger in town, right? So another mistake is choosing a property manager based entirely on fees. Well, the saying goes, you get what you pay for. But the problem is most landlords only focus on the monthly management fee and they don't realize, look out, or even understand all the other fees. Well, a lot of property managers know that. So they'll charge a unusually low management fee, like let's say like 5%, but then they've got all these other fees, right? Trip fees and service charges and markups for maintenance and high leasing fees and accounting fees built somewhere into the contract, and the owner just doesn't even realize it because they're looking only at the monthly management fee. So you've got to add all the fees up, find out all the charges, all the ways they're making money, and then make an educated decision if that's in your favor and if you're getting a good value. Not having accurate expectations up front. So ask questions like, how do you advertise, or how do you screen tenants? How long does the average property take to rent? What can I do to get my property to rent faster? Ask these intelligent questions so that you and your property manager can have that conversation up front so that you have accurate expectations. Ask them, will I be notified if there's an application? When will I be notified? How often are you going to keep me updated during the vacancy process? If there's a repair, what happens? Do I know about it? Ask these questions so that you have the right expectations. Not having an understanding of the company's business model. So as I kind of went through in the beginning, there are some companies that only do property management. There are companies that only do real estate sales, and then there are some companies that do both. So you want to have an understanding, do they do in-house contracting? Do they bid it out to third-party contractors? What is their company structured? I want to know like the structure. You should know the structure of the company you're working with. And lastly, the biggest mistake of all is not hiring professional property management. So as we're kind of winding down here, I appreciate you guys staying on with me a little bit later. I went through actually all of this already, so I'm going to skip forward. You've got our Yelp page, 63 reviews. When I took that, our Zillow page, over 200 reviews. Every property manager should have a Yelp page and a Zillow page. Always, always, always look them up and find out what other people are saying. You're going to read reviews from tenants. You're going to read reviews from landlords. And it's very interesting sometimes to see some of these reviews. You might have a great conversation on the phone with a property manager, and then you go, you know what, I didn't get a chance to do this beforehand. Let me look them up. And then you read all these reviews and go, wow, glad I looked that up. Like, a lot of these tenants are saying the same thing. No one's calling me back. You have to look online to see what people are really saying about that company. I want to give you guys more information, more education on property management. So on our website, marshallreddick.com/property management, that'll take you to the educational part of our website where everything is free. We've got videos, articles, guides, tutorials on lots of different topics related to property management. There's even a list of questions to ask property managers on your first initial conversation. So to help you guys come off as educated, experienced, brilliant investors, we've provided you with some questions to ask property managers on our website. Lots of good data on there. So I'm going to take one more poll, and then I've got my final 2 slides. So we'll be wrapped up here in about 3 or 4 minutes. So, and you know what? Everybody is still on. I love you guys. Thank you for hanging in there the entire time and hopefully finding this worthwhile. So our final poll question is, what is most important to you when choosing a property manager? You can select one. The options are quality, fees, and longevity. I mean, how long the company's been in business. Is this a new company or they've been in business? Does that matter to you? And then online reputation and reviews. That's a tough one. They're kind of all important. But if you guys could take part in that, and just whatever one that sticks out you think is kind of the most important of all of them, appreciate you guys participating. I'll give you about 5 to 10 more seconds to do that. All right. Thank you guys so much for voting. I'll go ahead and close that off here. And I can see that you guys paid attention. So 60% said quality. I think quality with value, right? Quality at the right price is probably what most of us would say. Price, still important. Nobody wants to feel like they're overpaying. Longevity, 7%. Online reputation, 13%. I think my point here is if you're looking at each one of those, adding it all together, making that educated decision, then I think that's the right way to go. Now what I'm going to do is actually I'm introducing Vince Tomich, because Vince is your point of contact after tonight's presentation. Vince is our real estate advisor who is able to go through and spend time with you one-on-one over the phone to help you basically guide you in the right direction. And whether you're, looking to do this, buying a property in the next month or in a year or 2 years, or if you're looking to sell property, or if you need just better property management, Vince is an amazing point of contact to go through with you guys. So, yeah, Vince, take it away.
Thanks, Scott. So as Scott mentioned, my name is Vince Tomich, and I'm an advisor here at Marshall Reddick. My role as a real estate advisor is to learn about what's important to each investor, so that I can point you in the right direction to accomplish your short-term and your long-term goals. To give you a little bit of background on me, I was born and raised in Southern California, currently living in San Clemente. And prior to becoming an advisor, I spent over 4 years in residential mortgage lending. And I always wanted to get involved in real estate investment. And there was a big portion of that time that I didn't think it was possible. But, you know, thinking about my background in mortgage lending, I was able to understand the power of leverage. And I understood that at that point, I was able to make a purchase of an investment property of my own. So over the last 3 years, I've accumulated a total of 3 out-of-state investment properties. That includes 3 single-family homes, all of which I use property management, which Scott has touched on today, is so critical. During that time of me acquiring these properties, I found myself spending more and more time in the investment space, and that's how I found Marshall Reddick through a webinar like you guys are on this evening. From that point, I was sold. We serve as a one-stop shop for all real estate investment needs, and that's why I was so eager to join the team here. I'm available to schedule a call after this presentation to go over your specific situation and learn more about each one of you and your particular goals with real estate, whether that's buying, selling, property management. So feel free to contact me at any time for questions. My contact information is on the slide that you see currently, and I will be reaching out to you guys this week to connect and get a little feedback on this particular webinar. So thank you so much for your time this evening. We really appreciate it.
Absolutely. And Vince's phone number right there for those of you is 949-885-5178. And then email is vtomich, VTOMICH @marshallreddick.com. Typically, Vince and our advisors will schedule a call maybe over email for a date and time that you're available. Very, very casual conversation, no obligation, no pressure, asking you guys specific questions to help guide you in the right direction, providing you with insights, knowledges, resources, and really just kind of taking that the next step to help you guys accomplish your goals. This is basically what Vince and our advisors cover, is helping you as an investor understand your why, your hows, your when, your what, your where, and your who. Helping you identify why you're investing in real estate, setting your goals, specific, tangible, measurable goals for investing in real estate. So really coming up with the exact measurements of what it is you're looking for cash flow, return on investment, cap rate, going in detail on the specifics, helping you evaluate what options you have to acquire property for conventional financing or 1031 exchanging or self-directed retirement account investing, and then helping you figure out the best time frame that makes sense for you based on your knowledge, your experience, your capital, your capabilities, helping you then figure out what criteria makes sense for you, what markets make the most sense based on your criteria, and then introducing you to our property managers, mortgage lenders, insurance agents. So everything is connected through Vince, our advisor, and he'll help you really take time for as long or as little as you'd like on the phone to make that hopefully the start of a beautiful, successful, long-term relationship. So, I really want to thank you guys again for joining us tonight. Vince and I have definitely enjoyed having you guys on this webinar, providing this information. I know there were a lot of questions that were asked that we didn't really get a chance to go through. We actually capture those questions, and Vince will be able to go through those questions with you more one-on-one in detail. You have his contact information again there at the end. This is recorded and will also be on our website, and some of you might be watching the recording soon. So thank you so much. Good luck to each one of you. We look forward to connecting with you guys very soon. I want to wish you happy investing. Thank you.